Welcome back to Legacy Years, the podcast. I'm your host, Kristy Osborn, and today we're talking about a strategy that can have a major impact on retirement income and legacy planning. It's often misunderstood. If you own investment property, a 1031 exchange could be a powerful tool to help you simplify, reposition, and plan for the future. Joining me today is Whitney Nash with Above and Below 1031. She's going to walk us through how this works, when it makes sense later in life, and what people need to know before making a move. Welcome to the podcast, Whitney. I am so glad that you're here.
Hello. Thank you for having me.
Absolutely. If you would start off by telling the folks a little bit about yourself, and I'm curious why you started your own company.
Sure. I am a qualified intermediary and facilitate 1031 exchanges. I'm a certified exchange specialist, a CES, and I started my company Above and Below 1031 almost 8 years ago, and it's my husband's fault. So he is a CPA, used to have a CPA firm with another CPA as a partner, and he owned a mortgage brokerage business. A lot of his clients were real estate investors, and they became CPA firm clients. And my husband knew that they were going to need to do a 1031 at some point. So he knew he could not be their qualified intermediary because he is disqualified. He's their agent in another capacity. So, but Whitney, you could. Uh, I started learning and looked into it. And I'm like, I can do this and I really like it. So I self-taught and started the company. Fast forward a little bit of time and realized, no, I can't be a QI for his clients, but the wheels were already in motion and getting my clients elsewhere anyway. So it worked out really well.
That's funny. It's funny how things come full circle and how we end up doing the things that we do. You never really think that when you're young. It's
Yeah,
crazy.
you don't even realize this is a job, right? I didn't grow up as a little girl wanting to be a qualified intermediary
Right.
for 1031 exchanges.
Well, why don't you tell folks what exactly a 1031 exchange is? Because I feel like that is baseline, what we kind of need to explain because not everybody realizes that.
Yes, exactly. So a 1031 exchange actually refers to an IRS tax code. So Internal Revenue Code Section 1031 has been part of our tax code for over 100 years.
Oh, wow.
So a lot of times people think, is this really legal? Yes, it is. And it has been for a long time. So it's been called a lot of things throughout the years: Starker exchange, deferred exchange. They all mean the same thing. It's when somebody owns quote unquote real property held for investment or use in a trade or business. They want to sell it, take the proceeds, reinvest them in the next like kind of real property held for investment or use in a trade or business for a period of time. If they want to defer having to pay capital gains tax, depreciation recapture, they can take use of the 1031 exchange.
Yeah.
So in order to do that, you cannot take constructive receipt of the proceeds yourself. You would need to use what's called a qualified intermediary to be an independent third party to go into an exchange agreement with them before they close on what they're selling, so that the QI can hold the funds in between the two transactions. And then when it's time to buy, they work with the closing company to get the funds to them. So yeah, it's a great tool. They have more buying power.
It's a great tool. And I do think more people need to really understand how it works. People don't realize that and they wait too late to pull you into the picture.
Yeah.
Let's talk about what are some of the common misconceptions that older adults have about 1031.
Well, one of them is not realizing they need a QI until it's too late. So that's always really sad when I have to tell somebody, oh, you already closed? I'm sorry. I can't help you. But another one is that they understand they have to do like kind property, right? But a lot of times people think that means exactly same for same. Single family rental house for single family rental house, office for office, land for land. That's not the case. And with retirees specifically, a lot of times they're tired of being landlords, tired of property management, tired of trash tenants, toilets, and termites. So they don't want to pay tax on the sale, but they also don't want to have another rental, for example. They don't necessarily realize there's other opportunities like investing in oil and gas mineral rights or a Delaware statutory trust, a DST. So they do have some flexibility to still have that investment, the tax deferral, without having to deal with all of the baloney.
Right. And it's a lot.
It can be a lot. Yeah.
Yeah. So when you think about 1031 exchange and you think about retirement, when does it make sense in retirement and when might it not make sense?
It wouldn't necessarily make sense if they need the money now. If their real estate portfolio is really their retirement accounts and they need to start selling off so they have just regular income. If they're going into long-term care or something like that, they might just need to sell, unfortunately pay the tax, but then they have that chunk of money to use the way
Right.
they need to. It works better when they might have other funds for that, or there's still some longevity ahead of them. They want to use it for an estate planning tool, then having that tax deferral. But things like DSTs, for example, they still get monthly income. So as long as they don't need a big chunk of money right away, then it might still make sense for them.
Got it. So when you think about someone using a 1031 exchange and like you mentioned the DSTs and how they might have some income. You don't advise on that. You just advise on the 1031 exchange, but they pull in what, a financial planner or somebody to help them maybe determine where those funds should go, or how does that work?
Potentially, yes. So,
Okay.
as the Q, I cannot give investment advice. I'm not a CPA. I'm not an attorney. I can't give advice in those areas, but I can explain the 1031 rules and what their options are. So, I can explain when I hear their situation and what they're really looking for. I can say, well, did you know you can do this? You can do that. If they need referrals, I'm happy to share some options and they can do their own due diligence and pick something that's right for them. But yeah, it's really just about letting them know what the options are, and then it's up to them, their financial advisor, their CPA to kind of go through and see what might be the best result or the best
Got it.
investment.
And I think we probably want to be clear when they're getting those funds, though every cent has to go back into that like kind exchange, correct?
For full tax deferral, yes. So there's actually three numbers to keep in mind when doing an exchange. So they want to buy something for equal or greater value than what they sold, minus allowable closing costs. If they're paying off a loan, they need to have what's called debt offset. So if they're paying off a loan of 250, they need to get a loan or bring cash to the table or a combination thereof of 250 or more on the replacement property. And then yes, when you look at the bottom of the closing statement where it says proceeds to seller, for full tax deferral, they put that full amount into the exchange account with the QI and then use that full amount towards the purchase.
Okay.
Any difference in those three numbers is taxable. However, if they do want to take some money out from the closing, like let's say they have 300,000 in sales proceeds and they want to take 10,000 out to use for something, I don't know. They can't take that 10,000 out, but it's taxable and
Okay.
then use the rest. Um,
Interesting.
as long as they realize that it's taxable, a lot of times people think that if they take money out from the closing, it's a return of their basis. That is not the case. The IRS sees it as last in, first out, and last in is the gain. So it's taxable.
Got it. Okay. So, how does a 1031 exchange intersect with estate planning and the step up in basis?
Yeah. So that's one of the really great things about doing a 1031 is if you don't need that big, chunk of money while you're still alive, or maybe you have several properties and, sell some to take the proceeds and then maybe hold some for inheritance to your loved ones. So what happens is your heirs will get a step up in basis. So let's say, for example, that you purchase replacement property valued at 500,000. 10 years later, pass away, it's worth $1 million. If your heirs were to sell it, where it's that date of death value, fair market value, they don't pay tax on any of that gain that's been deferred.
Wow.
Right. So sometimes people want to gift their real estate to their adult children while they're still alive. I always recommend they talk to their CPA and their estate planning attorney
Yeah.
to see if that is the best path forward. Sometimes it is, but other times it might be more beneficial to wait, let them inherit it once they pass away. So that way there isn't like a gift tax owed when they sell it or give it to their child. It can erode a lot of the gain that's been
Right.
acquired over years. So yeah, it can be a really great estate planning tool.
And that step up in basis stays in place, right? They're not necessarily selling that property right then, but when they do, it'll start at that step up value versus the original
Yes, excellent
purchase.
point. So let's say they inherit it at $1 million and want to keep it as an investment or whatever. And 5 years later, they want to sell it. They only pay tax on the gain of that 5 years that they've owned it. Or they could do a 1031 exchange themselves at that point.
Right.
Keep deferring. Yep.
Keep it going. So, and I think I know the answer to this, but I just want to be sure that we're clear. What happens if someone does multiple 1031 exchanges over a lifetime?
So that happens a lot. Basically, what happens is the basis keeps shifting to the next property. So over time, the basis can become very low in a higher value property because remember, we're always trying to exchange up in value, equal or greater value. And of course, they just appreciate while you do hold them. But then the really great part is when they do leave it to their heirs, they get that step up in basis,
Mm,
or they can just keep amassing a bigger portfolio while they are alive. They can 1031 into different types of property, like I said, or multiple doors. They can keep growing their portfolio. So continuing to do a 1031 exchange not just kicks down the can of having to pay
yeah.
capital gains tax and depreciation recapture. It can also help them with diversifying their portfolio, or if they need to move their portfolio. Like, for
Yeah.
example, a lot of people are moving from California to Texas. They want to move their rentals from California to Texas,
All
right?
right.
So just keep 1031ing and they can keep having that deferral and even change locations.
That makes sense. So, but if they were to at some point come out of that 1031 line, it goes back to the original unless it's the inheritance situation?
So if they keep 1031ing and then decide to sell,
Yeah.
then tax does come due on
Okay.
what they've deferred. So hopefully their property now is worth, a considerable amount
Yeah.
and they would have the gain that could pay the tax easily. So, or yes, they just leave it to their heirs.
Or just leave it there. That's right. Um, what are the risks or limitations that retirees should understand before pursuing a 1031 strategy?
Sure, sure. So I think a lot of it has to do with like health and cognitive risk. So, like I was saying before, if they need to, if they need the funds for just living expenses or long-term care, or there's some other kind of health need, right? They might not want to do the 1031. It doesn't necessarily make sense. Pay the tax and then you have the money to use. Also, if they're heirs, if there's multiple heirs, sometimes heirs don't always agree on what to do with a property, right? Because they
Yeah.
don't necessarily have one for each child to give to them. That's all equal value if they want to split it up equally. So that could cause some risk with the inheritance aspect of things. So maybe a will and directives could help with that. But still, sometimes you have that risk of, property is not easily divisible between different partners,
Right. Right.
siblings. So.
We kind of briefly touched on this, but when you have someone who's looking to do that 1031 exchange, what's the coordination across the board with financial planners, with CPAs, and even estate planning attorneys? Does that end up in your line of work happening quite a bit?
Somewhat, especially with CPAs. I do always recommend that they discuss their 1031 situation needs, that they're considering it in the first place before they actually do it with
Right.
their team of professionals, especially the CPA, because they can help determine maybe they don't even need to do a 1031 exchange. Maybe there's enough losses in the rest of their situation. They can just sell the property, take the proceeds, and do what they want with them. It depends on their situation, and I am not privy to that information. And I cannot give tax advice, like I said. So it's really good for them to involve their team of people in this conversation to let them know they want to do this, see what their reaction is, And of course, I'm always happy to hop on a call with any of these people if they have questions or concerns. Sometimes people don't always know all the rules, or
Right.
they might think it is same for same type of property, and no, that's not the case. So sometimes I can help clarify some of those misconceptions as well.
Yeah, I think that is so helpful. And I do think people need to be careful because you want to be sure that you're getting the proper advice from the proper person. People don't realize that we can't give tax advice or that we can't, like, people ask me 1031 exchange questions, and I'm like, I'm not, don't ask me. I'm not an expert. I know how it works, but I'm going to refer you to someone who knows what they're talking about.
Yeah. Yeah. I understand. I get asked questions too. I'm like, I have to stay in my lane.
Yeah. Stay in our lane. So I always ask my guests if there's anything else that they want people to know about their specialized topic that we didn't cover.
Um, I mean, there's more to know about doing a 1031 exchange. There's other qualifications, there's other rules to understand. Um, so I do recommend that they speak with a qualified intermediary
Yeah.
with as much advance notice as possible, even if they're not even under contract to sell yet, if they're not even listed to sell yet. If you have questions about it, ask to talk to a qualified intermediary, and they will explain the rules and qualifications, make sure it's even feasible for you to see if it can be
Yeah.
part of the plan as you progress moving forward.
Yeah. I do always tell people that same thing when we're talking mortgages, plan ahead. And I think it's so important with what
It
you do
is.
that people do plan ahead. And if they're even considering this or they just want to get more information, talk to someone who knows.
Yeah. Yeah. I definitely would rather talk to somebody 13 months in advance, which has actually happened once, than the day after they close.
Right. So, Whitney, how would people get in touch with you?
Probably the best way would be to go to my website because all my contact information's there. You can click on a link to my Calendly and schedule a call with me. That's always the best way to get on my calendar so we don't play phone tag. So my website's www.abovebelow and the numbers one.
And when you think about a 1031 exchange, are you guys qualified across the US? Is that how it works?
Yeah, great question. So because this is a federal tax code, I can help people in all 50 states. Sometimes my clients are in another state, what they're selling's in a third state, what they're buying's in a fourth state. It
Yeah.
doesn't matter.
Okay.
So I can help people across the country. Everything's done over the phone, email, DocuSign. So it's very easy.
Yeah. Good to know. I thought that, but I wanted to be sure that we did
It's a common question.
cover that. Well, thank you so much, Whitney. Thank you for your expertise this morning. I do hope that folks learned something and that if they're interested in learning more about 1031 exchange and about tax planning, that they would reach out to you.
Yeah, I look forward to hearing from them.
Thank you.